Welcome everybody to the daily recap show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks rose on Thursday, signaling a recovery from back-to-back losses as chip linchpin TSMC's strong outlook boosted AI hopes, and bank stocks rallied after upbeat earnings from two of Wall Street's heavyweights. Now, today was actually a very green day, particularly in two of the largest sectors. Financials were very good, driven here by Morgan Stanley, Goldman Sachs, as well as the asset managers. But we also saw the broad complex participate. Visa was flat, JP Morgan up, Bank of America was up, Citigroup was up. All in all, financials really did do well, weighed back a little bit by Berkshire Hathaway and MasterCard right here. Now, semiconductors were very bullish on the back of TSMC's earnings. We're going to talk about why that is. You can see the hardware manufacturers, the electronic manufacturers, and the semiconductor equipment manufacturers were also green as well. And ultimately, it was a rotation into these from like the software names, from sort of like Apple, from Microsoft, the infrastructure names. It was just a big rotation into semis. Google was down 1% on the back of this news because it impacts their TPU business. Amazon and Tesla were sanguine on the day. And then we did see participation in most sectors. As you can see right here, there were only three red sectors through and through. Those three red sectors was the XLC, the XLE, and the XLV, so healthcare, energies, communication services, with gold taking a little bit of a backseat right here. The S&P 500 was up 0.62%. The RTY was up 1.22%. And again, it's small caps really leading. The market saying, hey, the broadening is happening. And I think this is the market's nod saying, hey, like we think these small cap earnings are going to finally see material earnings growth. We're looking for something like 67% earnings growth for the year in the Russell 2000, driven by revenue growth as well as margin expansion. And the market's noticing that and saying, hey, these are great valuations. We're going to go ahead and buy these. Now, tech was up 1.5% as well, leading the charge. XLU was up there. XLI was up there. Real estate was up there. So anything related to tech, AI, or data center was doing really well. Real estate, plowing ahead as well. Financials was up 0.62%. All in all, it was just a bullish day to continue the momentum you've seen so far this year. Very solid stuff. And today ultimately was a day for two sectors, or two factors, I should say. Small caps did really well, and then growth did really well. Now, it was green through and through. I mean, core was green, value was green, but ultimately, right, it was a day for large cap, mid cap, small caps in the growth area, and then value core in growth as well. I guess you could probably add like mid cap core to this list as well, but that's neither here nor there. Now, let's talk about why we were green. Now, number one, we actually did get pretty good economic data, in my opinion. For example, when you look at initial jobless claims, that came in at 198K. We were expecting 215,000. That's a big beat on initial jobless claims. Now, with jobless claims, remember, the lower the number, the bigger the beat, right? Because less people are filing for unemployment assistance. On top of that, look at this New York Empire State Manufacturing, right? Essentially, like just how the manufacturing sector is looking in the New York region. 7.7 versus the consensus of 1. Philly Fed Manufacturing, 12.6 versus -2, the consensus. Massive manufacturing beats. We're seeing reacceleration in manufacturing here in these indicators, coupled with jobless claims looking really good. The economic data was actually really good. And generally speaking, when we get good economic data, right, coupled with rate cuts that are coming this year, risk assets do really well in that type of environment. Furthermore, we saw some geopolitical tensions easing. Trump came out and said that he's not planning to authorize strikes in Iran, as he has been told that the killing in Iran of protesters is stopping. So that helped cool expectations of potential US intervention. Gold pulled back on the back of this news, silver pulled back on the back of this news, crude pulled back significantly on the back of this news. And this did ease things because Trump came out and said yesterday or earlier that Iran would pay a big price for its violent response to anti-government protests. Now, those two things, the earnings and the geopolitical tension easing, right, that helped equity sentiment. But ultimately, the big driver today was TSMC's earnings. And TSM just reminded the market who really owns the AI trade. They dispelled fears of any type of bubble because Q4 beat across revenue, earnings, and margins. Margins expanded by 200 basis points above the expectation, right? The Q1 guide was miles ahead of expectation. I think it was something like the street was expecting 33 billion in the guide. They came out and said we're looking for 35 to 36, a massive beat. CapEx jumped from 46 billion to 52 to 56 billion, a massive CapEx jump. Management said they are capacity strained and capacity is very tight going into 2028 and beyond. So guys, the AI trade has legs into 2028. And guys, this isn't a cycle. This is choke point, and that is why the stock was up 5.3% today. It's why AI stocks were very bullish. Another reason why stocks were bullish today was some of the asset managers and the financials. Now, I think financial earnings have been great, but we got the icing on top of the cake here. BlackRock beat EPS expectations by a wide margin, by nearly $1, right? The street wanted 2.6. BlackRock came out, reported 13.6. They beat on revenue of $7 billion, right? The market wanted 6.6. Assets under management officially broke 14 trillion. The market was expecting 13.9 trillion. And you can see Wall Street loved this, up 5% on the back of this. BlackRock should really do a stock split. And this is just great for asset managers and the financials at large. Goldman Sachs was also up 4.45% after beating on EPS expectations, beating on revenue expectations, beating on net income expectations. It vaulted past its own equity trading revenue high, setting a new Wall Street record and far exceeding expectations in its fourth quarter earnings. However, the Apple Card exit did impact platform solutions. And then for everything we saw today, guys, there was 3,800 advances, 2,300 decliners. We saw outflows in the Nasdaq 100 and the New York Stock Exchange, but if you measure the gap up, it was actually inflows. The S&P 500 was green here on the day. Market momentum looks really solid. Let's hop on the charts. Now, guys, everything is green and it looks like the trend is continuing. Look at the S&P 500 and the Nasdaq 100 up 1% and just shy of 1%. But look at what's leading as well, despite the TSM news, right? The Russell 2000 up 1.3%. Look at mid caps, look at small caps. The RSP sort of doing what the S&P 500 is doing. That's the equal weighted S&P 500. Today is just another risk on day. A lot of strong catalysts from geopolitical tension, earnings, to some policy shifts, right? Economic data as well. And all of that means equities are green. When we get good news, right? Stocks tend to do really well. Yes, we climb the wall of worry, but when that worry turns into good news, like the geopolitical tension stuff, like the AI bubble fears, and then we get TSM's earnings, and that means Nvidia's earnings are going to be good. Probably Google's earnings are going to be good. Stocks will rally in anticipation of that. And that's exactly what we're seeing right now. But again, this broad market rotation continues to do really well. In fact, let's go on a year-to-date return. Let's see what the Russell has done. Just up and to the right, up 7% year to date. Absolutely insane stuff here from the Russell 2000. Now, if we scroll down, we saw mixed price action internationally. Now, European stocks were up 0.5 percentage point. Middle Eastern stocks were up just shy of 1. China stocks took a bit of it on the chin. India stocks were pretty much flat here on the day. Now, crypto not looking too shabby, but doing very well year to date and for the week so far. Taking a bit of a breather, but down 1% for Bitcoin, down 2% here for Ethereum, but they're still looking very constructive and holding key levels here for the market. Now, looking at the macro, volatility did subside. You see the VIX was down 7% and at the 15 handle. Now, yields did increase ever so slightly, and that didn't help yield sensitive names. Some of the if you look at like some of the smaller real estate names, they didn't do too well because the 2 and 10-year yield did accelerate. The dollar was very strong on the back of that news, and you can see gold, silver, and crude just down big on that geopolitical tension news there. And you saw that money rotating into just equities, risk assets, particularly US equities, in particular tech stocks. Now, when we look at the S&P 500, yesterday was a brutal day, but the bulls came in, bought the dip, and now we're pretty much trading at these highs right here, and that is the all-time high for the S&P 500. The Nasdaq 100, I think these earnings from TSMC is going to propel us back to these highs right here. I think we're going to see a little bit of outperformance from the Nasdaq 100, similar to what we're seeing right now. The Russell 2000 looks very strong. Let's just quickly zoom out right here. Guys, look at this chart. This is all-time highs, price discovery, breaking, awesome. This chart looks really great. We bought the the dip right here, and we've been holding small caps, particularly small cap quality, for a while right now. Let's look at the RSP. A very similar chart. Looks really strong. You can see this was a choke point right here. Resistance, broke above resistance, retested, and now it's just pure price discovery. We're looking at a 250 RSP handle sometimes this year. Can we get there? Maybe another 20% return for sure. I mean, I talk about the equal weighted valuation gap between that and the cap weighted, and I wouldn't be insane to actually see like the RSP up 20% this year. Same with the Russell 2000. That's not crazy at all, guys. But in terms of if you look at the individual stocks, I do like EOSE. We were buying this heavily at the $12 mark. We were selling a lot of cash secured puts, adding equity positions right here at this level. I think we're going to see $20. You can see the stock was actually up 3% today after its investor day yesterday. Very big move from EOSE. I do like this name. Another name I do like, and I said to buy at the $22 level last week. I said you want to buy this name right here, is SkyT, up 8% today. And the reason why I absolutely love this name is because it is a domestic manufacturer in the US along with EOSE. We do know that Trump just put on 15% tariffs for semiconductors being imported into the US. The tariff game is back on. These guys are unaffected. In fact, Skywater Technologies domestic pipeline is entirely US based. So that's going to get the approval from Trump. There's also a defense. They have defense exposure in here, quantum exposure. You get a lot, but that's why I like Skywater Technology and EOSE. I also do like APLD in terms of a data center REIT. You sort of get that data center and real estate exposure in one name, but it had a massive run. We're going to see a bit of a pullback, and as long as we hold the $30 level, onward and upward here for APLD. Now, another name that I really do like when it comes to the AI data center complex is T1 Energy, ticker symbol TE. Now, these guys manufacture solar panels. I was buying cash secured puts heavily at the $5 area there and deep out the money. That's what you want to see. I don't have direct equity exposure in this name, but we made a lot of money off the cash secured puts. And I do think as long as we hold the $7 area, I think we're going to see a move up. Look at this chart, man. It just looks really good. And it's another US domestic supply. And that's ultimately the theme this year. Defense, semiconductors, but as long as they're US based, and especially energy as well. Those are the big themes in 2026. Now, if you want to remain a little bit defensive, right, a name I do like defensive growth is Oscar Health. They were up 7% today, and ultimately all Oscar Health is doing is sort of just trading in this massive range. I think this is a great accumulation point right here. They're trading in this massive range, right? I think if we break out decisively, we could see a move above the $24 area into the $30 range here for Oscar Health. I like this. It's a bit of healthcare. You get a bit of defense in your portfolio, and you get quite a lot of growth as well. And then another name that I really do like is Zeta. Now, this is absolutely crazy. The CEO has like an interview on YouTube. I might link it in the description. If you go actually watch that interview, Zeta's business is absolutely incredible. So, I think I definitely want to add some like equity exposure to this name. Earnings are coming out in late February. I think maybe selling cash secured puts at the $20 area, maybe even doing like a strangle on a name like this would be well worth it. But yeah, look, I want to buy at the $20 region, sort of being this high volume node area right here. I really like the business model for Zeta. You're definitely playing on the advertising theme, which, in perpetuity will grow between 7 to 10% very long term. Now, with TSMC's earnings, two names that I do like in terms of the mega caps is Micron. Micron chart just looks absolutely incredible. If we can get a pullback to the $300 region right here, onward and upward, I think this theme continues in 2026, 27, and 2028. And then another name I do like in the mega caps is Nvidia, trading at 26 times earnings, growing 60% this year. I mean, we've done pretty much nothing since August. We've just traded sideways, good all-time highs. We're putting in higher lows. You see, we've sort of got like a wedge thing going right here. I think eventually we are going to see this move to the upside. That's probably going to come after its earnings. But today was a really good move for TSMC and for the AI semiconductor complex as a whole. You can see Nvidia up 3.39%. Very solid stuff. And it's ultimately driving the gains in the Nasdaq right now. Now, let's look at some of our other risk assets, our other risk parameters. Bitcoin. I do like Bitcoin. Yesterday, we said, we're looking for a breakout above this region right here. So if we go ahead, leave a line right here, you could see we had multiple resistance points. We broke out, and now we said we want to retest this, use it as support, and then go from there, break above the 100,000 area, and ultimately our target would be the 107 area right here. But let's first aim for the 100,000 area. So that should come in the next couple of weeks. We're just going to break at about the 94,000 area, use that as resistance, and then go from there. there. Very similar situation to ETH, right? We sort of want to hold these lows right here, we break above this region. Once we do that, Bob's your uncle, onward and upward. But crypto looking very, very constructive, forming higher lows and definitely basing out in the very long term right here. And ultimately, guys, the thing is with these assets, right? Bitcoin and crypto are really, really long duration assets. We're talking 10 years, 15 years plus, especially when you look at the tailwinds, putting the entire financial system on the blockchain. With Bitcoin displacing stuff like the US dollar, the really, really long duration assets, the TAMs are absolutely massive. And that's why you want to hold these with a very long time. Just ignore the noise, accumulate when you get massive moves that pull back like this, and just watch this compound over the years. Now looking at some of our other parameters, guys, when you look at European stocks, they continue to break out from this base, new all-time highs. They're in price discovery. European stocks are cheap. Middle Eastern stocks looking very much the same. These charts look really, really good. I do like European stocks and Middle Eastern stocks as a great diversifier from US stocks, but ultimately you do want exposure to US as well. Now looking at the 10-year yield, I think it wants to move lower, and I think it probably will. We look at the 2-year yield. I think the new Fed chair is probably going to want to get the rate right. It's at 3.5 right now to like 3%, somewhere around there. If that is the case, the 10-year yield will fall. The dollar, I think the dollar is going to strengthen. And we said this through the end of last year. We said the dollar is going to strengthen. That's exactly what the dollar did. And I think we're going to see 104 in the DXY sooner rather than later. Now guys, looking at gold, silver and crude, you could see GLD. I was actually going to buy some gold, but just couldn't bring myself to sort of add capital at these highs right here. If we get a pullback, maybe to the $400 area, yeah, we'll go ahead. I think gold definitely does move higher, but it just feels wrong to buy it up here along with silver. Silver looks like Tesla in 2021. If we can get a pullback to the $68 area, that's probably a good place to enter. But wow, what a squeeze. Absolutely crazy. Commodities rallying, but they were all down here today on that geopolitical news. And then when you look at crude probably ends up going lower based on the Venezuela situation. But all in all, guys, we're constructively bullish on the market. We want to be long tech. We want to be long the broad market. We want to be long high beta. That is what's going to work this year, 2026. Guys, and diving into sentiment, this is the AAPL sentiment survey. And we are seeing some really bullish movement here, consistently above 30 and 40%, approaching 50%. Bearish sentiment ticking down, bullish sentiment ticking up. And this suggests one simple thing: improving risk appetite. And this is generally supportive for momentum near term for stocks and risk assets. In the short term, that optimism can actually keep prices rising, and it can keep dips getting bought and stocks just grinding higher. But it also raises the risk of a pause or a potential pullback if positioning gets too crowded. Now, ultimately, I think what we're looking at right now is earnings. Forward 12-month earnings estimates are rising for both here, the Russell 2000 as well as the S&P 500. But more dramatically, it's actually the Russell 2000. We've seen massive improvements in earnings after sort of like basing out here for the last 4 years. And I think we probably are going to continue to see this moving higher in the Russell 2000. And I think that's where you want to put your money, in small caps, in the broad market. Look, you still want exposure to the S&P 500, don't get me wrong, but I'm just saying outperformance is going to come from this sector right here. And actually, when you look at valuations for longer term investors, the equal weighted S&P 500 is one standard deviation cheaper than the cap weighted index, with valuations implying about 4 to 6% alpha in the equally weighted S&P 500. And this is ultimately what you wanna see. Now let's look at the macro, guys. I thought we were going to see this move down significantly. This is the Fed's Q4 GDP now estimate. No, we're holding these levels. That is a good thing. That's exactly what you want to see. At the same time, global PMI surveys signaled a sustained upturn of worldwide business activity at the end of 2025, even though December's growth was the weakest for the last 6 months. This is bullish. At the same time, hard data is still improving while soft data remains weak, pointing to an economy that's holding up better in reality than in sentiment. In the short term, the divergences tend to support equities, but it also leaves the market vulnerable if confidence doesn't eventually catch up to the data, guys. And then looking at data for tomorrow on Friday, industrial production, that's really it. We have a couple of Fed speakers, but nothing crazy. We only have State Street reporting here their earnings, guys. And if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment. I'll